Hello and welcome back. Today's video we're going to continue our series on technical analysis and we're going to be talking about support and resistance. So what are support and resistance? And more importantly, how do we identify them on the charts? Every day in an open market, the prices are going to move up and the prices are going to move down. So support and resistance are areas where these prices could stop, get stuck. They could even turn around and move in the opposite direction. It's kind of like if I were to take a ball and throw it around in the room. So if I throw this ball on the floor, what's gonna happen? I think I can expect it's quite likely this ball is gonna bounce off the floor rather than fall through it into my neighbor's house downstairs. Similarly, if I were to take the ball and throw it up at the ceiling, I can expect the ball is probably gonna hit the ceiling and fall back down rather than go through the ceiling into my neighbor's house upstairs. So the floor and the ceiling, they contain this ball within this room. This is something we can also see in the candlestick charts in the financial markets, whereby there are floors and ceilings, areas on the chart whereby the price can stop, bounce off, change course, change direction, just like how a ball bounces around in the room. In the financial charts, the floors are known as support because, they support the prices from falling to their neighbor's house downstairs. And the ceilings are known as resistance because they resist the price movement from going to the moon. Remember, the gist of investing is buying something at a lower price and selling it at a higher price. Support and resistance is a very commonly used method to try to identify where are the low prices that bring opportunities to buy and where are the high prices that bring the opportunities to sell. So in this example, we see this support or this floor. If we're expecting that prices will bounce off from this support, then this could possibly be a good buying opportunity. Or if prices are at a resistance or a ceiling and we're expecting the prices to fall back down, then this resistance could present us with a possible selling opportunity. Now remember, the whole market is looking at the same price data, the same chart that you are looking at. If the majority of the market has more or less identified similar support and resistance lines and more or less has the same expectations of what prices could do when it comes to these areas, then we can expect something is likely going to happen when the prices come to these levels. And this could present for us really good buying or selling opportunities. So being able to identify where these support and resistance levels are, where these areas of buying and selling interests are, this could give us an edge in our trading or investing and help us to become more profitable. Now we're going to discuss 4 tips on how we can identify support and resistance lines. The first tip is to look out for areas where prices have been stopped or have changed directions before in the past. So in this example, I can kind of see that there is a floor somewhere around here. And that's because in this area, the price actually bounced off from here multiple times. You see one bounce here, one bounce here, one bounce here, and here it kind of slowed down the downward movement of the prices before it bounced back up again. And very clearly here there is another bounce. So we can see a multiple number of times in which prices have interacted and changed directions at this floor. And up here we see a very clear ceiling. What we can observe is the price kind of slowed down as they approached this line before it actually bounced off this line and changed direction. And once again, when it was trying to come back up to the ceiling, the prices actually lost momentum and went back down towards the floor. So once again, prices are back at this ceiling resistance level. So what do we do? Is this the time to sell? Are prices going to come back down again from here? The fact is, nobody knows. Support and resistance only shows us places where prices have been stopped, where prices may have changed directions before in the past. It could change directions again, but the fact is we don't know what it's going to do. And this leads us into the second tip. Support and resistance can be broken, and when broken, usually will switch roles. In the first example, very clear support and resistance lines. The price actually has bounced off this support line, and the ceiling has actually prevented the price from going higher over this period of several months. But one day, bam, the prices broke through. So in the second example, we see that prices have actually bounced off this really strong support line many times over several months. However, eventually they did break through. And when it broke through, the support line actually became a resistance line. Support and resistance lines can be broken. And when that happens, their roles can be reversed. Support becomes resistance. Resistance becomes support. Tip number 3. Support and resistance rarely, in fact almost never, will be one precise exact price. Typically, it is a zone, it is an area. The support line is somewhere here, and the resistance line is somewhere here. However, we notice that these lines do not touch every single point in which the price turns. So bear in mind, it's never going to be one precise, perfect price. And that's not what we're looking for here. We're not looking for a perfect sweet spot. What we're looking for are zones or areas of opportunities where we can make a decision about whether we're going to buy or whether we're going to sell. And this leads us into the fourth tip. Don't overthink it. Support and resistance lines should be fairly obvious. It should be fairly simple. Remember, the whole market is looking at the same candlestick charts. The whole market is looking for the same areas of opportunities in order to make trading decisions. The key is to keep it simple. Don't overcomplicate things. So in this example here, too many lines have been drawn. We don't really know what to do. Are we near a support? Are we near a resistance? What do we do with this information right now? So the key is to simplify things. Just stick to the lines that are the most obvious, because these are the lines that the entire market is paying attention to. So this is one of the reasons why I use options in order to trade and invest in the market, because option strategies enable me to profit from the market in more scenarios compared to simply buying or selling the stock. And therefore, I don't need to be very precise in terms of identifying where these areas of opportunities are in order to take a position in this stock. So support and resistance, they are areas on a chart whereby prices might stop, get stuck, or they might even reverse in the opposite direction. Now we can use this as a tool to help us to identify areas of opportunities where we can look to buy low and sell high. How do we find them? Firstly, they are areas where the prices have changed direction in the past. However, they can be broken, and when they do, they tend to switch roles. Very often, these are not specific, precise sweet spot prices, but they are areas or zones which we can look for opportunities. Lastly, they should be fairly obvious. So make sure we are not overcomplicating our charts. So that's it for today's video. If you've learned something today, do leave a like, do leave a comment. It helps the channel immensely. In the upcoming videos, we're going to continue our series on technical analysis, and we're also going to be talking about options trading strategies, how we can use these tools that we learn in technical analysis, how we can make use of these zones of opportunities in order to identify and execute our trading positions in the market. So make sure you're subscribed so that you don't miss out on that, and I'll see you again in the next video.